In this video, I am teaching how to do your due diligence to study and research stocks. So let's get into this. Hey guys, welcome to our financial future. This is a channel designed to build a community of investors so we can all reach our financial freedom. My name is Phil, and thanks so much for taking your time out of your day to be here. I know your time is valuable, so I promise not to waste it. If you are new here, I have a YouTube stock market course in my playlist that's 6 hours long, so be sure to subscribe so you can check that out. This is a 3-part series of doing your due diligence, so let's jump into this. Building my circle of competence about the healthcare industry and the knowledge about the technology that was the only way I could ever make a clear thesis of how to make this a possible investment. We're going to go through the due diligence process, research, and studying I did. I'm also going to go through the thoughts that went through my head to build my story to convince myself that this is a possible investment. If you feel other people on YouTube would enjoy this content, then hit that like button, as the YouTube algorithm will go out and find them. The company that we're going to be looking at is called Semler Scientific, and the product is also called quantitative. What this product does is it detects major cardiovascular disease, and it detects it in a preclinical stage. The people most at risk at the preclinical stage are the smokers, diabetics, and people with high blood pressure. Also people with cholesterol problems and the obese. These are the people who have a greater risk of developing this disease, and the numbers are pretty staggering when it comes to the amount of people who fall into those categories. Even though you show no symptoms, this product will be able to pick it up in the early stages. The disease it detects is called PAD, also known as peripheral artery disease. It's a very serious disease, and the American College of Cardiology, American Heart Association, and American Diabetes Association believe that there needs to be more testing for this disease. Peripheral artery disease is the narrowing of the arteries of the lower extremities. This is similar to the narrowing of the heart arteries that causes heart attacks. This can lead to amputation of limbs. The Wall Street Journal calls it one of the most deadliest and costly cardiovascular disease the public has never heard about. It leads to 30,000 amputations per year. It also increases the mortality rate by 4 times and can be an early warning sign for heart attacks and strokes. Currently, it is believed that 20 million people in the United States alone might have PAD. This is more serious than cancer and coronary artery disease, which leads to heart attacks. Just a physical examination and going over patient medical history will usually lead to a misdiagnosis of PAD. 75% of those 20 million patients have no symptoms to give a clear sign to be concerned about and go undiagnosed. This equals 15 million Americans who might not get tested for PAD because they are asymptomatic. At this point, I've already started to build my thesis about this company. There is a serious problem in diagnosing this disease, and we need a better solution. Saving people's lives is very important, and Semler's device has a need in the economy. When people are diagnosed with PAD, it gives them the motivation to want to get healthier to prevent possible amputations, which is the result if PAD goes untreated. This makes me think if they can detect PAD earlier on, it will encourage people to want to live better lifestyles with exercise and healthy eating. This will take a lot of pressure off the healthcare system if less of the elderly have to frequent the hospital. This will also help insurance companies because less claims will be made. We will have a healthier population because they will want to treat PAD with exercise, and this will be noticeable among the elderly. The amount of amputations, specialist time, and deaths will reduce the amount of dollars that have to be put into hospitals, and this will free up capital to improve our healthcare system, making QuantiFlow a more attractive investment. For me, the bigger problem something solves, the more it is needed, the more profit that can be made, especially if 15 million people aren't being diagnosed properly for PAD. This lines their product up to be adopted by a lot more practitioners to prevent future surgeries or healthcare conditions that should be getting addressed. For me, I want to invest in companies that are doing good things for the world because it lines up with my morals. As I kept doing my due diligence, I came across what the old technology was, how it worked, and what Semler Scientific is going to hopefully replace. The old technology uses ultrasound devices that amplifies the sound of blood flow. They would put a pressure cuff around your arm and then slowly release the pressure from the cuff. They measure the pressure once they can hear the blood flow going through the ultrasound, which can help determine if there is a blockage in the veins. The problem with the old technology is that it is not routinely done in a clinic. It's also not done outside of hospitals, like old folks' home, for example, where the majority of the cases are. This shows me their product is needed because this is where their patients reside and will cause more problems in the future if gone untreated. The reason they don't go outside the hospitals with their ABI Doppler is because it takes too long to perform the test and also requires a specialist to administer it. There is also the problem with the discomfort, and some patients have non-compressible arteries, which just makes the test uninterpretable in about 8% of the cases. This helped me build my thesis even more because the QuantiFlow product is portable and can be administered anywhere that the product is needed. It can also be administered by someone who isn't a professional, which saves someone who is a specialist a lot of time because it can be more important having them to be free for emergencies. With everything going on with the pandemic, the elderly won't want to go to the hospital or out in public to get tested for PAD. This is making Semler Scientific's product a lot more attractive to the healthcare system. They will want to get this product out into the hands of the right people so patients can get tested for PAD. If the pandemic continues to get worse, we will need those specialists to treat patients, and Semler Scientific's technology could help if we see an inflow of patients with the virus. At the height of the pandemic, we needed as many doctors as they had, and Semler's product can help free them up. To come up with this thesis so far, I've only watched 2 YouTube videos. This is usually all it takes to spark your interest into a company that you might possibly invest in. The next resource I want to get into is the investor's presentation. This can be found on the investor's relations page on their website. Here I gathered more information about the company, and here you can see that they have a reoccurring revenue model where it's a software licensing fee at a fixed price or variable price based on usage. For me, I added this to my story because I really like reoccurring revenue models because you don't have to sign people up to big contracts right away. So if you are able to produce revenue straight away, this is a big thing. This also helps predict what your revenue will be like over time. You will know that revenue will be coming in on a consistent basis by the amount of people who are signed up. It can be a lot like the Netflix effect. I love the recurring revenue model. It seems to be working very good lately for a lot of companies, and this is something that I liked when I read about it. The story continued when I read that health insurance plans pay for it, and at-home risk assessment companies as well. This is a very reliable way of getting revenue because people will use their insurance plans when they have to. And Semler Scientific doesn't have to rely on the public paying full price for their product, which is allowing more people to have access to it. Here it says they've had clearance from the FDA and their patent as well. When you have intellectual property like this, you will have to make sure that there is a patent for it, or another company can come in and just steal your idea. When it comes to biotech companies, you really want to make sure that their product works. And here it says their clinical trials have been accurate. The next thing I went to read is the annual report. These things can be very long to read, sometimes taking a couple hours or longer, but they are a must-do. You have to read these to understand the business. Going through the annual report, I read that 49% of the revenue comes from one source who is a US diversified healthcare company. This can mean 2 things. If they lose this customer, they are at risk of losing 49% of their revenue. On the other hand, they're still holding the contract, which also means to me their product has value if this healthcare company is still using their product. It's something to keep in the back of your mind. You want to see companies who have multiple customers, so if they lose one, their revenue doesn't take a huge hit. I scroll down a little further and notice their market targets people who are 50 years and older, and based on the research, there could be up to 80 million Americans that need to get tested for PAD. For me, it shows the market is huge, and they are only tapping into a small portion of that market right now. Another thing that caught my eye had to do with manufacturing. Their current manufacturer can be replaced with other US manufacturers if anything were to go wrong with that relationship. Most of the parts are supplied from China, but can be replaced easily in the US. This is good because they won't have a problem with manufacturing even if there is a trade war. Then I got into the part of the annual report that talks about competition. It says that there are no known products that perform digital ABI, ABI being the old school way of performing the test. And they're only the only digital test at the moment. ABI test can range from $2,500 to $20,000 and requires a specialist to operate this technology. This is why I see so much potential in Semler Scientific. They provide so much value that their product is cheaper and they don't need a specialist to run it. Since Semler Scientific has no competition other than the old way the tests are being performed, it provides some comfort because competition can ruin a company. There is a section of the annual report called risk factors. It goes over the things they could experience that could hinder their business. I picked out one of the many, but it's important to read all of them. It says here their stock was delisted from the NASDAQ and moved to the OTC market, which is known as over-the-counter. This impacted the price of their stock and the access to capital markets. OTC markets do come with risk as companies on these markets don't have to meet certain regulations. If they got traded on the New York Stock Exchange or the NASDAQ, there would be rules they'd have to follow. You might also run into the problem of having no one to buy your stock and might have to sell at a much lower price than expected. There are companies like Nintendo that have to be bought on the OTC market. Just because they are on the OTC market doesn't mean they are a bad company, but you want to understand what the OTC market really is. Would you have passed up on buying Nintendo stock at $12 a share in 2014 and 6 years later making 4.5 times your money by 2020 when its share price went up to $55? I wouldn't let the OTC market be the thing that is a make or break factor for your investing decisions. Adding this to my thesis, let me know where there are some risk added in investing in this company. Because they trade on the OTC market, and the annual report will help you know the risk you are taking, which helps you improve your story. I'm not going to go through the whole annual report because this video would be like 3 hours long, and we want to really look at other things like the financials. And this is going to help build our thesis even more when we plan to buy a stock. The first thing I look at is the income statement. And remember, these numbers are in millions. We can see here that they are consistently improving their revenue year over year pretty quickly. We can also see it doesn't cost them a lot to make that revenue, so the gross profit is very high. What this tells me is that it's cheap to make the product and they can make a lot of money selling it as long as they keep their operating expenses down, which they have been able to do. We can see how that transfers over to the net income line in between 2018 and 2019. They were able to triple their profits in 1 year, and that's huge growth for a company. We can see how this is reflected in the stock price as it went from $8 a share to $52 a share in that time period. What this shows me is that there is a huge demand for their product, and that this trend were to continue, more customers would see more value in this technology and adapt it to their healthcare practice. It also shows me that they're able to run a company in an efficient manner that produces profit. At the start of the video, I mentioned that out of the 20 million people, 75% of them are asymptomatic, equaling 15 million people. This makes me think that Semler Scientific has only a small portion of the current market because of the existing ABI test and its inaccuracy. Since only 15% of the people are getting tested currently, and Semler already has some of that market share, and this still leaves out 75% who aren't being treated yet, which is who their product is targeted at. Regular ABI testing isn't targeted at that other 75% of people because those people are asymptomatic and won't get to a specialist because they aren't showing any signs. This really opens a large part of the market for Semler Scientific to grow their revenue a lot more. The revenue growth is already impressive with the market share they have, but tapping into the market that hasn't been touched can lead to a lot of growth for this company. We also have to think internationally because these are just the numbers for the USA. Of course, other countries don't have as big as a problem with PAD because they probably live healthier lifestyles, but the demand is still there. Now let's move over to the balance sheet. We can see they have 5 million in total liabilities and 18 million in total assets. This means their company is worth 3.5 times more than what they owe. If we look at their cash position compared to the debt, they have 8 million in cash and no debt at all. This shows me that they are very healthy when it comes to their financials. And they also have some cash to work with if they ever got into any trouble creating revenue. They can also use this cash to expand their business, which will create more revenue. This would drive the stock price up as long as they don't take on a massive amount of debt, trying to create more revenue. The next thing I want to know is how well management is with their cash when they are investing it back into the company. This is done with the return on equity calculation. We take 13 million from stockholders' equity, and then we go over to the income statement, which is 15 million on net income. So we divide 13 into 15 and we get an 86% return on invested capital, which is extremely impressive for management. And this is making this seem like a really good investment. As a shareholder in this company, I would be very impressed with that type of return. And this is what we want to see in management. Next is the cash flow statement. And I want to see what it says on the free cash flow line. This is the cash left over after operating expenses and capital expenditures. This just shows me once again that they are able to produce a lot of cash with little expenses when we only see 15 million on the net income line and 11 million here. The last part we want to get into is what price do we want to buy this at? The first thing that comes to mind is what is the sentiment in the entire market? Are people really greedy right now? Or are people kind of in a neutral or fearful emotion? Currently, as July 26, 2020, people are very greedy in the market in my mind. The market is going up for the only reason that the federal bank is printing money to sustain an economy that is not doing very well. In the time we live in, where consumers are in extreme amount of debt and American corporations used all their free cash to foolishly buy back shares when their stock price was overvalued. I could talk about this for hours, but to cut this short, I believe the market is overvalued and I don't see strong revenue growth moving forward. I'm going to be looking for news or events along the way that will support my thesis that I've described so far. When there is a pullback in this stock, we want to look for a margin of safety to buy this stock at. If I feel that I bought this stock at a low price, it reduces the risk of losing more money if we believe that they are going to grow the revenue in the future. If the stock price ended up going up and they had an event and went back down, this leads us to a place where we will be back at square one. For me, picking a price, I just think, what is the potential for future revenue growth for this company? We can see here that the stock price is $53 a share. The market is always looking ahead, predicting where things are going, but they aren't always right. This is where investors like us have to find opportunities to outsmart the market, because the market doesn't always think in a creative way like we do on creating the stories about these companies. If we look at the run up in 2018, it went to $35 a share. Then after the hype kind of dropped, it went down to 28. What goes through my mind here is if the share price drops back down to $35 to $28, is this company going to perform better in the future than it did in 2018? Maybe it only drops down to $40. You always just want to think of the future revenue they're going to make. We want to think what made the stock price fall. What was it? Was there an event of some sort? If I think the event isn't going to hinder the revenue from what it was like in 2018, and they could possibly get better revenue, then I would say this could possibly be a good place to buy. We want to look for the holes in the Mr. Market's evaluation. For all I know, it could drop this stock well below $28, which can improve our margin of safety. We're just trying to use our knowledge of investing and make predictions based on the information we're being given. Even though the stock price is high or its PE ratio is high as well, it doesn't mean it isn't a buy. If we are predicting revenue to grow a lot more from where the price is currently, then it could be a buy. Look at Apple when it released the iPhone in 2007. It had a PE of 34 and a share price of $19. It's $370 a share now, but back then it was considered overpriced. All you had to do was predict the iPhone was going to grow revenue and you would have made a bunch of money. There are many ways of figuring out what you should pay for a stock, but for me, I like to keep things simple. I compare the stock price to its future growth. If there's future growth potential, the price seems cheap and it goes on sale, then that's a buy for me. It requires a lot of patience and you might not buy the stock for 2 years. This is why we have a watch list with multiple companies on it. We don't need to pick 20 companies to get rich. We just need a good few opportunities and time them properly. We have to be ready when stock prices fall, and this is why we research so much to get ready to strike when they do. I hope you found this research useful and what my process looks like. It's pretty simple and it does involve some time and some practice, but if you believe in that, then this will help. Thank you so much for watching this video, and I'll see you in the next one.